Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index slipped back toward the 98.7 level on Monday, snapping a 4-day rally. The move followed reports that federal prosecutors have launched a criminal investigation into Federal Reserve Chair Jerome Powell, raising concerns over the central bank's independence. Markets now turn to upcoming inflation data, major bank earnings, and rising geopolitical risks, including unrest in Iran and uncertainty across South America. During European trading on Monday, WTI crude edged higher, briefly touching a one-month high near $59.62. Prices were supported by escalating geopolitical tensions in the Middle East, as sharp rhetoric from President Trump and deepening unrest in Iran raised concerns over potential supply disruptions. This dynamic leaves oil prices highly sensitive, balancing fears of sudden conflict escalation against the reality that global supply has not materially declined, only become more opaque and costly. Spot gold surged to fresh record highs in early Asian trading on Monday, hovering near $4,629. The rally was driven by weaker US employment data and heightened policy and geopolitical uncertainty. Israeli airstrikes targeting Hezbollah's underground facilities in Lebanon added to regional tensions, boosting safe haven demand. December's softer US payrolls reinforced expectations that the Federal Reserve will hold rates steady this month, while TD Securities projects at least 2 rate cuts later this year. The US dollar weakened modestly against the Japanese yen on Monday, slipping toward the 158.1 area. The move followed reports that Japanese Prime Minister Sanae Takaichi is considering calling a snap general election as early as February, lending mild support to the yen. This would mark her first direct electoral test since taking office last October, allowing her to capitalize on strong public approval ratings. The euro traded near 1.167 during Monday's European session after 6 consecutive days of advances. The pair has been supported by growing expectations of a dovish Federal Reserve stance following weaker US employment data. However, the euro's upside may be limited as easing inflation across the euro area reduces the likelihood of further tightening by the European Central Bank. Headline inflation slowed to 2% in December, a 4-month low, and in line with the ECB's target, while core inflation eased to 2.3%.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.